for more on this, I do want to bring in Melissa Otto. She's head of TMT research at S&P Global Visible Alpha. Melissa, it's great to have you in studio today, and certainly a lot to talk about when it comes to this technology space. Let's start big picture, of course, with the tariff latest. Some encouraging signs late Friday, and then a little bit of confusion based on what we heard from the president and Howard Lutnick on Sunday. How are these tariffs set to impact the technology space?
Good morning, it's great to be here. Never a dull moment in the technology sector, and that couldn't be more true now under a new administration. You know, I think there's the exemptions, even if they are temporary. I mean, we're still sort of gauging what the reality of the situation is a positive signal, particularly for any of the companies that are doing hardware manufacturing. I mean, to be frank, Asia is technology is Asia, so anywhere in the region, there's going to be some part of the supply chain that's probably getting touched.
Yeah.
And so companies like Apple, Dell, for example, this is at least a sigh of relief temporarily, maybe while they try to rejigger and think about what their next steps are. It'll be interesting to see how it all really shakes out.
Right.
But in the near term, I think the risk is to the upside.
Okay, so let's talk more about that, because we do see the technology names set to outperform at the open today. Of course, amid the volatility of late, we've seen them underperform a bit. But the S&P 500, for instance, which is driven a lot by technology, set to open about 1.5% higher. So in the near term, it sounds like bias is to the upside, but realistically, I mean, how could these sort of levies impact the costs on these goods and impact the supply chain?
It's hard to say, do they absorb some of the costs and then the consumer absorbs some of the costs? Does the consumer absorb all of the costs? Does the company absorb all of the costs? We don't really know. Earnings season is going to be, I think, very exciting, because that's an opportunity for CEOs to come out and really provide that vision and commentary in terms of what they're expecting and how they're going to guide the market.
Mm-hmm. So what would you like to hear from some of these chief executives in this particular environment?
I'd really like to know how they're thinking about their cost structures, what direction they're going to take their strategies, and how they're expecting revenue growth to unfold over the next couple of quarters.
And in terms of your own models, how do you see that playing out?
I mean, there's a lot of play in numbers. It could go either way. I mean, there is a very significant range of estimates based on Visible Alpha consensus, especially looking out to next year. We see ranges of billions of dollars in terms of expectations. There's bulls and bears in either direction, which could have a huge impact on valuations.
Mm-hmm. So, of course, Netflix is going to kick things off for some of these technology names. It's really a streaming company. All these different technology names, sort of are unique in and of themselves. But Netflix will kick things off later this week. What are your expectations when it comes to that?
Netflix has been one of the more stable companies coming into the quarter. Based on Visible Alpha consensus, we have not seen much movement in their estimates from last quarter compared with their peers in the space and other mega cap tech stocks. However, looking ahead, their ad-supported business still has significant range of estimates. Estimates now range from $3.5 billion to $17 billion for ad-supported revenues, looking out to fiscal year 2027. So it'll be interesting to see how the ad dimension to their strategy actually changes or focuses their valuation and what the price target could potentially be over the next, say, 6 to 12 months.
Yeah. I'd be curious to hear from you if it is a recession scenario and or if prices rise significantly. There are a lot of outcomes, as you've been alluding to, that could play out here, but how sticky are some of these technology services and hardware when it comes to consumers? How keen would they be able to still spend on that in any one of these environments?
Yeah, there is some evidence that some data is showing that ad revenues have been slowing. So if we go into a recessionary scenario, there may be a likelihood of that continuing. If that's the case, it may have an impact on businesses that are fairly correlated to ads. But it'll be interesting to see what the company says. I want to hear from the CEO directly.
Yeah.
What are they expecting? How are they dealing with it? How are they navigating it?
Yeah.
Great companies are good navigators.
Are there any companies within the tech space that you think might be more resilient in this environment?
It's hard to say, but Netflix, based on the trajectory of their earnings into the quarter, the fact that we have not seen any real movement in estimates or consensus numbers, it does imply some level of resilience.
Melissa Otto, she's head of TMT research at S&P Global Visible Alpha. Melissa, thanks so much for joining.
Thanks for having me.
Yep.